Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carrillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carrillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carrillo. Today we have Kristina Knight. Kristina previously worked as a senior investment analyst running a $1 billion plus agency mortgage portfolio. Since 2017, she's been a full-time real estate investor, and her firm syndicates apartment complexes with over $60 million in assets under management. Thanks so much for being on the show, Kristina.
Thanks for having me.
So I briefly touched on your background. Can you go and give us a little bit more on your professional experience prior to starting your current real estate company?
Yeah, so I worked in investment management for a little over a decade, and largely was focused that entire time in the fixed income world, but in housing and as a mortgage portfolio manager and investment analyst, and then later moved on to portfolio management and was responsible for managing different client accounts and our firm's intermediate strategy. So had a lot of technical experience, a lot of experience looking at deals, not real estate deals, but mortgage investments, housing investments, and, kind of managing portfolios and looking at how things should be structured and put together, and a lot of work with clients and investors. So, that background kind of set me up for what we're doing today, because there's a lot of similarities, even though it's a different asset class.
Right. So you're on the other side of it instead of the mortgage side of it. You're actually utilizing those loans for purchasing property.
Yeah, exactly. Buying the real estate ourselves. So
Why did you choose real estate as your investment vehicle?
It kind of happened accidentally. I was working in finance and I had bought a condo in Boston at the time that I knew I would eventually want it to be an investment property. I bought it actually with, if I was ever going to rent this out and move out of Boston, would I be able to cover my mortgage and still cash flow? So I kind of already had looked at it like that. And then I took a year off actually from the corporate world to travel. And I left the investment management. I just wasn't feeling fulfilled, and I knew I wanted to do something different. I wasn't sure exactly what it was. And then kind of like while I was traveling, my husband and I were renting out our condo and we were making a lot of extra money from doing that. And we kind of had this like aha moment, like, why aren't we doing more of this? Like, this has been so great. So that was kind of what started this whole crazy journey over the last several years. I guess I had always planned for it to be an investment, but never really saw this course and, what would happen down the road.
You got used to that residual income and really liked it.
Yeah, it was really nice. I was like, if I did this 10 more times, I wouldn't have to go back to the corporate world.
There you go. So that was your first real estate investment. What was your next one after that?
Yeah, so our next one after that was a fourplex that we bought out of state. We bought it in actually Washington State. And it was a really interesting deal because it was a fourplex, but it also came with a single family home, and we purchased it from a wholesaler. So we were able to negotiate seller financing. So we kind of did our first fourplex. We did a fix and flip. We did seller financing, and ended up being a BRRRR deal all in one. So
Wow.
that was kind of fun, and we learned a ton. And we recently just sold that first property and, had some pretty significant gains from that investment. So turned out.
So from that quadplex, what went right and what went wrong with that? Since that's really your first multifamily investment.
Yeah, so it was a pretty big overtaking. Taking over a fix and flip single family home and the fourplex at the same time, it was a lot to kind of coordinate and figure out. I think the things that went right were we had really thought through the business plan and what we wanted to do. And we had the right team in terms of like the contractor and everyone, property manager in place to work with. Some things that went wrong were on the fix and flip, we went way over budget because it was a 1900s building, and everything under the sun that could have, happened and needed fixing happened, from the roof to the foundation and electrical not passing inspection and all of those things. So that was a really fun learning experience. We also had on that deal, we had to separate. They were two separate parcels, but they had actually never been separated from natural gas. So we had to, work with the city and excavate the natural gas and separate the lines. And the city actually caused a natural gas explosion. So, and then they tried to sue us for it, but we ended up fighting and pushing back on that, and everything worked out. But there were a lot of things on that first deal that went wrong, but also a lot of things that went right. Our business plan worked out, and we hit our monetary targets and learned a lot. So.
Yeah, I've separated natural gas before in properties, and that's been a nightmare. So I can't imagine outside and separating. It was just because it's one of those things where we're getting rid of old oil, right? Furnaces. So you're putting in new ones. So you have to work with the contractor, and it has to be, you're in the middle of winter. You can't have something without heat, and you're trying to, they're putting in, they hang the new meter and everything. And it's just, I don't wish it on anyone. It's something that if I ever did it again, it has to be like, if everything was vacant, that's when you could go through and do it, and you could do everything right away. And, but that's an undertaking.
It was. And I don't think, you talk about your first big deal or whatever. I definitely didn't realize like what we were getting into with that. And it was, it was kind of like, oh, no one's done this before. We can figure this out. We got it done. We had the right people to get it done, but it was definitely a lot at first to figure out.
The one last thing before we move on is just to highlight, you had issues with passing inspection, and that's one of the biggest issues with fixing and flipping. And it's like, it can be the smallest stuff I've ever had hold up deals. And, an outlet's wired the wrong way, or one way, we have to put extra insulation in a non-attached garage, or something so minimal, and you're pushing it back, and now it's pushing back a couple of weeks, and when it pushes back a couple of weeks, it's all coming out of our pocket. And that's something too that, I passed on doing flips as much years ago, because it's just a lot of stuff that has to go right to make money. So
totally. Yeah. Definitely. It was a good experience to do one of them, but definitely not our long-term business strategy.
So currently, what's your company's investment strategy?
Yeah. So we are now looking to do larger investment deals, anything kind of 60 units and up. And we are focused on the Phoenix market. So we've been I just got back from Phoenix. I was down there for 2 weeks on a due diligence trip and looking at a ton of different properties for potential investment. So we're kind of looking to find some value add multifamily deals there that make sense, and looking to take those down.
So what are your main factors your team's looking for when they're underwriting a deal?
Yeah. So for us, being value add focused, we want there to be some kind of way that we can go in and increase rents, whether that's through renovation or from, the asset is kind of under or mismanaged. There's operational efficiencies, or it's kind of, been owned by the same people for a long time, and they haven't understood like what's going on in the market, and, really looking to get in and add value there for our investors and increase the NOI. In terms of, building class, I would say we're focused on anything 1970s and later from a vintage perspective. And then, solid C+B buildings, not looking at anything kind of class A or new build. And then, in terms of location, that's definitely our most important factor. And then, Location has to be, a solid C plus B location, C plus becoming a B or B minus, trending towards B plus A territory. So heavily focused on having like the right demographics and location for our investments as well.
Yeah, I can say I'm pretty much in that same class. The C plus and above is definitely, I wouldn't really go any lower than that. And I want to see the gentrification coming through. So I definitely agree with that strategy. So if you're out looking at properties, is your main role at your firm in acquisitions, or do you take other hats as well?
Yeah, so I'm actually focused on asset management. So I, given, my portfolio management experience, that kind of translates into managing a portfolio of assets. So I kind of help figure out the business plan and the strategy, and then managing the asset, and then also working with the property managers on a pretty, involved basis to make sure that we're hitting our goals and targets, and that, the property manager is working out.
So you guys have about $60 million in assets. What kind of systems has your company introduced to assist in asset management and scaling?
Yeah. So, I'd like to say that it's, there's some fancy tool we use, but we use a lot of spreadsheets. We have like different trackers that we've built out from an asset management perspective that look at kind of the portfolio aggregated and then the assets individually, so we can compare and contrast the performance against one another. And then, working with, we have some specialized reports that we work with on with the property manager on, and having them fill out certain information for us that we like to see on a weekly basis.
So you're coming from another side, you're coming from the mortgage, you're coming from a different asset class, and you're coming over to real estate and syndication. Why do you feel that real estate syndication is such a powerful investing technique?
So coming from fixed income in the investment world, I feel like there's so few investments that give you like such a bang for your buck, right? Like there are, real estate is so powerful in terms of what you're able to create wealth wise, in such a short period of time, that when you look at across the investment spectrum, there isn't a lot of
Yeah.
other asset classes out there that have the same like level of risk, which I would say real estate has pretty low risk compared to other asset classes that can generate similar returns. Some people like cryptocurrency, but I think that's pretty risky. And so, I just love it. I love what it can do for people. I love how dynamic it is and how there's always something to figure out and a problem to solve, and, a way to get from place A to place B. So
Yeah, it's also easy. I think it's easier to underwrite because you're looking at it's if you're looking at a company and you don't have all the information, and that's my thinking towards stocks. It's much different because I'm looking at a property. I can tell everything about the area. Everything is public record. I know what stuff's renting for. I can easily pull it up. I can walk those other assets and see exactly what they are and make sure you really can limit your risks if you do the right. I think that's, people aren't doing their right due diligence. That's where it becomes risky. If you're doing
yeah.
your correct due diligence, and like you said, you're tracking everything through your programs and spreadsheets, and you have a huge checklist when you're looking at a property, what you're doing to make sure. And obviously you're very well honed in on your target market. So it's not as much now, it's easier to pull a trigger. But for a new investor, you're going to be looking through and making sure that everything lines up. And if you do it, you can really minimize your risk. So you're right. I mean, it's completely night and day from other investments.
Yeah, and it's tangible, right? Like you can see it, and you can, like you said, you can go there and walk the property, and you can create a business plan, and you can look at comparables and tell if you're in the right ballpark. And like, it's very much, if you put in the work, you can, pretty much get close to where you're going to be, from an investment perspective. Whereas stocks, it's just, you have no transparency with the company. You don't know what's going on. You have to go through these very complicated reports. So
When you've spoken to people in your previous professional career, and I imagine you've spoken to them about investing with you, and some of them probably have invested with you, what are the pushbacks from someone coming with that mindset versus someone that you might meet at a real estate conference that already is set on investing in real estate and using that as their investment vehicle?
yeah, that's so interesting, because coming from a finance and investment background, I think people are naturally pretty risk adverse, right? And they've been trained in this psychology that like stocks are not risky, and that, these companies, you can invest your 401k in stocks, but you can't make other investments with them. And so it's a very much an educational conversation, teaching those people like, no, really, like these are what the risks in the stock market are, and this is what the risks in real estate are. And, this is why like this is a great tool for you to be diversified with. And with those people, I generally don't say like, take all your money and throw it in real estate, right? That would be irresponsible. But it's like, no, this is a great tool for you to diversify your portfolio, and that can help you add to your wealth and have other alternatives for income.
Yeah, the main thing I hear from people is whenever you mention it to them, they might not be well versed on syndication, and like, oh, I don't want to get the
Yeah.
2 a.m. toilet call or something that
Right.
rarely ever happens. But it's one of the things is that they're not used to the syndication model where it's like, oh, okay, so it's much more like a REIT or like more passive, and it is passive, and it's great that the syndication technique can be open to all types of people.
Yeah, for sure. And I think when you talk to people that have already invested in real estate, right, like that own, maybe a duplex themselves, or they're house hacking, or they have a single family home rental, like they get it, right? Like they get it right away. And it's a much easier conversation than someone that's kind of coming from like a finance stock investment background. That can be a harder conversation to have.
Yeah, and it's also, I think if you come from a smaller multifamily where they might have been managing, they'd be like, wow, this would be a great investment if I didn't have to manage it. And you're like, oh,
Yeah,
hey, syndication.
exactly.
So what notable mistakes have you made as a real estate investor or entrepreneur?
Yeah, so I think I don't know about mistakes, right? There's always like little mistakes that you make, but I think getting into this, I kind of underestimated like how hard it was going to be in terms of like just getting started and getting your first deals underway, and like building a track record. Like it's been, I think, more challenging. There's a lot of people out there on podcasts and real estate shows that like, it's so easy, everyone's doing it, and there's this like, thought process where you're going into it and you're like, yeah, I can do this. And it really is, at sometimes it's a grind, it's hard to find deals right now. It's hard to, make sense of kind of some of the pricing in certain markets. And so I would say like, not that that's a mistake, but maybe just, reconditioning your mindset to like realize the difficulties.
Yeah, like a misconception of what it is. And that's the thing, I think, with every other person being a guru out there, after doing something, well, this looks so easy. And I talk to people that have, joined classes, or they call, we set up a 30-minute call with them or something. And they're like, oh yeah, you're telling, well, I mean, you need to have a lot of units if you're really going to take out some other income that you have that's active. You can't just pay one deal and everything's fine.
Yeah, we, our original business plan was to buy like a 4 unit at a time, right? And just spur it and then grow it. And very quickly realized that, in your first year one, you generally don't make money on the cash flow because you're kind of restabilizing the building. It can be tough to kind of, especially if you're doing renovations, to make money there. These are the things that people don't tell you always, and they're like, oh, wow, if we actually want this to be like our business and, the way that we live, we're going to have to scale and go bigger. So
the other thing too is like you hear from, or you don't hear on podcasts and gurus, and they're telling you it's all about the value add, which obviously most people's value add this year with COVID has been paused, right? Or it's definitely been changed when their hold period's been lengthened. And, you're not looking for, I think, any kind of market. If you're looking for mismanaged properties, that's a much more advantageous approach to finding properties, because you can find these properties that aren't managed. And in any market, if I'm cutting expenses, putting more people in there, minimizing turnover, you're going to increase your NOI. So
yeah. Yeah, totally. In this kind of market, you have to get really creative and try looking at what people are missing, right? Like what is someone not seeing here that could be potential value.
So what kind of mistakes, since you work with a lot of real estate investors, do you see other real estate investors make, whether they're starting out or even if they're, if they've been doing it for several years?
Yeah, I think number one is they don't have like the proper team in place,
Hmm.
right? So they might not have they might be looking at properties, but they don't know yet what property manager they're going to be working with, or they don't know, the markets really well in terms of like the submarkets and the rent that they can get. And so they're a little bit aggressive on their business plans and like the rents that are achievable, or they might not have done due diligence on like the comparable properties around and calling those properties up and seeing like, hey, what are you renting for right now? Like those are some pretty classic mistakes. And, other mistakes involve just kind of maybe over renovating, right? Like spending way more money than you actually need to in order to get the rent that you want to achieve.
Yeah.
We see that a lot, especially like doing property tours. I was looking at pretty large building the other day, and someone, the guy that was doing the tour was like, oh, this group spent 15 grand renovating this apartment.
Ooh.
And I was like, what? Like just totally blown away. I'm like, on what? They put in like granite countertops and like brand new like cabinets into kind of like a class, B building. Like
Jeez.
this is like way overdone for the rents that you can get in that neighborhood. So just things like that you see mistakes that people make.
Yeah, no, they're doing it like they're flipping it and not like they're
Mhm.
renting it, which is a
Yeah.
whole different mindset. And especially now, another great thing about multifamily is that when you're flipping, you always have to flip to a certain grade, really, of that property. But when you're finishing it for multifamily, like now, properties that we're looking at, we might say, you know what, we're gonna pause on, we're just do half as much value add right now that we're working on, and we'll just paint this and we'll clean this and we'll re-rent it for whatever, $30 more a month or whatever it might be, or keep it the same just to keep the occupancy as we're going through this period with everything that's happening. But with when you start putting money in like that, then you have to, now you got to find a tenant that's going to pay you $300 more than the last person.
Right.
Which is not the time when you want to be trying that out.
Definitely.
What do you think are your main factors that have contributed to your success, Kristina?
Yeah, definitely like, having a super strong why, right? Like my why is not having to go back to the corporate world and to really like be creating my own life and being in charge of kind of my own destiny and what happens, and having ultimate freedom financially, and with where I live and the things that I'm able to do. So for me, that's such a driving force. So that whenever you hit kind of a bump in a road or things don't work out, and it's like you can't give up. You just have to keep going and figure out how to make it work. Because real estate, for people just getting involved, like that's the other thing people don't tell you. It's like high highs, low lows. It's definitely like a roller coaster, and you get used to it. But if you don't have a strong driving force behind you, it's easy to just get disenchanted and give up.
Yeah, you gotta know why you're doing it every day and why you're consistently
Mhm.
doing it. And yeah, that's
Yeah.
very important.
Yeah.
So you founded a nationwide female-focused investment community. Can you talk about it?
Yeah. So I am super passionate about supporting women and teaching them how to take charge of their financial future and start investing in real estate. So I run one Tuesday a month a women real estate networking happy hour. It's on meetup.com, and we do it through Zoom, and it's really fun. And we just kind of tackle issues that women are dealing with. And then I also have a mastermind that I launched about 5 weeks ago, and that teaches women how to get started in real estate, or how to scale and go bigger. So whether, they don't have any real estate, or they have, a couple of units and they want to scale up, but not sure how, we have a few women in that program right now.
Awesome. Okay. And how
Yeah.
can people learn more about you and your business?
Yeah, they can go to our website. It's akrascapital.com, AKRAS capital.com, or you can email me personally. My email is knight, KNIGHT @akrascapital.com.
Okay. Awesome. And I'll put all those links into the show
Yeah.
notes. So thank you so much for being on today, and looking forward to connecting with you in the future.
Yeah. Thanks for having me.
Bye-bye.
Bye.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.